Hello, all the CA Inter students. Now you are going to write your DT examination in 1.5 days. This is the most requested topic from the student side in my group. So the topic is section number 50C. I will be covering this in less than 5 minutes with the full clarity with the two important study material illustrations as well, such that if the question or an adjustment comes, you will clear it with ace. And if you want any topic to be discussed, please comment below in the channel. Below the video, you can comment on which topic you wanted to have a small video such that you can cover that just in 5 minutes along with a good illustration backing it. Okay. So please comment which topic you want. Maximum possible, I will try to make a video on that and I will put it. Okay. Let's go into the main concept. Section 50C. 50C is talking about transfer of immovable properties, certain immovable properties being land, building, or both. Next one, it can be either long term or short term, means it can be holding period can be more than 36 months or even less than. Next one, that can be either depreciable, non-depreciable. Building, maybe it's a depreciable asset or it may be non-depreciable asset, anything it can be. Next, stamp duty value should exceed 110% of sale consideration, means the stamp duty value and the sale consideration value both are not matching. There is a tolerance band. Means what? Sale consideration is 100 rupee. Government stamp duty authority stamp duty value is 130 rupees. When government value is 130, you are selling at 110 or 100, means what is the point in that? I will consider only that particular amount of 130. It is similar to that of income from house property. What you earn really is not important. Real inherent revenue capacity I will consider and accordingly I will levy. But it is always a harassment from the government side to do like that. Therefore, government brought a section called as 50C, which has made a tolerance band of 10%. Means sale consideration is 100 rupee. Stamp duty value 103 rupees. Okay. Means what? My value and your value, it only 3% difference. No problem. Up to 10% tolerance band, government will agree. Beyond that, it will not. So see here. Stamp duty value, if it is exceeding 110% of sale consideration. So the tolerance band. Next, impact. If you transferred a land or building or both, which is a long term or short term, which can be depreciable or non-depreciable, and the stamp duty value on that particular property is exceeding 110% of your sale consideration, then 50C will get attracted. Number one, completed. Number two, impact. If it happens, what will happen? The stamp duty value will be taken as a full value consideration. I will not consider what you have really earned. I will consider the full value. Full value means what? The maximum value that it can achieve is SDV. You sold at lesser value, that's your mistake. So the full value consideration will be the stamp duty value for the purposes of computation of capital gain. Sir, why he is specifically telling for the purpose of computing capital gain? If the same happens in PGBP, depreciation you have to calculate at that time. What value you need to consider? At that time, sale consideration should be taken as the purchase price by another person. At that time, you should not tell stamp duty value for the purposes of computation of capital gain only. Full value consideration will be the SDV. Next one. Sir, SDV on which date I need to consider? You should consider SDV on the date of agreement, not on the date of registration. Okay. You can consider date of agreement only. But when you can consider the date of agreement, provided either whole or part of consideration, total value 1 crore. 10 lakh rupee I received on the date of agreement itself. That's it. No problem. From then, whenever you consider SDV, date of agreement SDV you have to consider. Provided that consideration whole or part should be received by account pay check or account pay draft or electronic clearance system on or before the date of agreement. So sum up all the conditions. Transfer should be a land or building or both. Long term or short term, depreciable, non-depreciable, stamp duty value is more than 110% of the sale consideration. In such a case, SDV will be considered as full value consideration, not your actual sale consideration. But SDV on what date we need to consider? SDV on the date of agreement you need to consider, provided on the date of agreement or before the date of agreement, whole or part of the consideration is received either by an account pay check or a draft or electronic clearance system. Next, situation. 3 situations can occur. Assessee accepted SDV, then SDV will become full consideration, full value consideration, and the sale consideration you should put FPC, SDV. Assessee disputed sale SDV. Means what? Stamp duty authority has given one stamp duty value. Assessee directly fight with them. Disputed. Matter went to the department. Dispute started. At the end, they will give one amount. Government will tell one amount. SDV finally accepted will become the full value consideration. Next, very important. Assessee did not dispute the value of SDV. SDV right, but SDV is even more than the fair market value. Sir, market value, if you ask anyone, everyone is selling only at 100 or less than 100. By mistake, SDV is more than 100. So now I am not disputing anyone. I am telling that SDV is way beyond the market value itself. In that case, matter will go to the valuation officer. Very important theory question. So in this case, when dispute is not on SDV, SSC is saying that, sir, SDV value is more than the market value itself, sir, not the my sale consideration. Any sale consideration, SDV is more. In such case, okay, assessing officer will refer the matter to valuation officer. Departmental valuation officers will be there. Now that person, departmental valuation officer, will calculate FMV. That FMV, if it is less than or equal to SDV, means what? The FMV itself is less than SDV. That FMV calculated by the assessing, valuation officer will be taken as a full value consideration for capital gain computation. If FMV is more than SDV, FMV is more than SDV means the claim made by SSC is wrong. Then SDV will be taken as full value consideration. Okay. Next example: X transferred house property. X transferred house property to Y. Cost of acquisition 8 lakh. Sale consideration is taken in 3 situations. Sale consideration, SDV is 68 lakh. Agreed consideration is 60 lakh. Okay. Next, SDV is 66 lakh. Agreed consideration 60 lakh. SDV is 61 lakh. Agreed consideration is 60 lakh. Okay. 3 situations. Always remember, it should exceed 110. Equal to 110 also. My sale consideration is a full value, not the SDV. First situation. See the first situation. Sale consideration 60 lakh. Okay. 110% means 66. SDV is how much? 68. Therefore, 68 is taken because SDV is more than 110%. More than, exceed. Second situation. Sale consideration 60. Okay. 110% means 66. SDV is also 66. So, SDV is not exceeding 110. It is equal to 110. So, no problem. Again, my sale consideration only is the full value. Third case, sale consideration 60. 110% is 66. SDV is 61. SDV is lesser than my sale consideration. So sale consideration only will be taken. I mean, less than that 66%. Sale consideration of 60 only will be considered. Full value consideration is 60. In all the cases, cost of acquisition is 8 lakh. This is the capital gains. Next. This is very important example. 6/8/2024, X entered into agreement. To transfer the plot. Land, building or both. Here land. Consideration 65 lakh. X enter into agreement. Advance of 1 lakh is received via account pay check on the same day. 6/8. 6/8/24 SDV 68. 12/7/24 date of registration SDV 72. Not to be considered. Reason: date of agreement SDV considered provided on the date of agreement or before date of agreement. At least whole or part should be received. Here part is received 1 lakh. On 10/11/21, long back, they acquired this land at 40,000 only. Now consider. Now tell me. First, what to be considered? My sale consideration you have to consider. How much? 65 lakh. SDV you have to consider. What is the SDV on that date? Because account pay check advance is received 68 lakh. Take calculator. 65 plus 110%. Sorry. 65 into 110%. 71.5. 71.5 is equal to 110%. If SDV is more than 71.5, then SDV will become full value consideration. Here it is less than only, na? So sale consideration is 65 lakhs only. Purchase is how much? 40. So sale consideration 65 lakh minus purchase consideration, I mean cost of acquisition 40. Capital gain should be 64 lakh 60,000. Perfect. That's it. This is 50C. Okay. All the very best. If you have any question to ask, if you want me to make any video, a short video, please put it tomorrow morning onwards. I will be completely at your service. I will do.